Should you buy or lease a car? Deciding whether to buy or lease a car depends on your financial situation, driving habits, and long-term goals. Each option has its advantages and disadvantages, and understanding these factors will help you make an informed decision. Here's a structured comparison to guide you. First, financial considerations. Buying requires a larger upfront cost, including a down payment, taxes, and potential financing fees. Leasing typically has lower initial costs with a smaller down payment and reduced monthly payments compared to a loan. Evaluate your cash flow and budget to determine which option aligns with your financial plan. 2. Ownership and equity. Buying. You own the vehicle, build equity, and can sell or trade it anytime. Leasing. You don't own the car, you pay to use it for a fixed term. At the end of the lease, you must return it or buy it at the residual value. If long-term ownership is important to you, buying is the better option. 3. Monthly payments. Buying. Loan payments are usually higher because you're paying toward ownership. Once the loan is paid off, you have no further monthly payments. Leasing. Monthly lease payments are often lower since you only pay for the car's depreciation during the lease term. Consider leasing if you want lower monthly expenses, but buying saves money over time. 4th, mileage restrictions. Buying, no mileage limits. You can drive as much as you want without penalties. Leasing, mileage is typically capped, e.g., 10,000 to 15,000 miles per year. Exceeding this limit incurs extra charges. If you drive long distances regularly, buying is more cost-effective. 5. Maintenance and repairs. Buying. Maintenance costs increase as the car ages, especially after the warranty period. Leasing. Leased cars are usually under warranty for the duration of the lease, reducing repair costs. Leasing might be more attractive if you want to avoid unexpected repair bills. 6. Depreciation and resale value. Buying. The car's value depreciates over time, but you can recoup some costs by selling it later. Leasing. Depreciation risk is the lessor's responsibility. At the end of the lease, you return the car without worrying about resale value. Buying is better if you plan to keep the car for many years, despite depreciation. 7. Lifestyle and preferences. Buying. Ideal for those who want long-term reliability and the freedom to customize their vehicle. Leasing. Suited for individuals who prefer driving newer models with the latest features every few years. Your lifestyle choices and preferences should influence your decision. 8. Long-term costs. Buying. While the initial cost is higher, owning a car long-term reduces expenses after the loan is paid off. Leasing. Continuous leasing means you'll always have a car payment, making it more expensive over the long term. Buying is generally more cost-efficient for those who keep their cars for several years. 9. Tax and business implications. Buying. Some tax deductions may apply if you use the car for business purposes. Leasing. Lease payments might be partially deductible for business use, offering potential tax advantages. Consult a tax advisor if you use the car for work-related purposes. The decision to buy or lease a car depends on your financial goals, driving habits, and lifestyle. If you value long-term savings and ownership, buying is the better option. If you prefer driving new vehicles with minimal maintenance and lower monthly payments, leasing might suit your needs better.